if we wanted to invest in S&P 500, because we know it captures the top 500 companies in terms of market capitalization in the US. So this is how powerful ETF is, because we can buy an S&P 500 ETF instead of buying all the 500 shares. And you will only need to pay one-time transaction fee. Just explain what are the difference between ETF and unit trust. So technically, ETF is like a stock, so where you can buy and sell when the market opens. Okay, so but for mutual fund, you can only know the price until the end of the day. So we also get to know that trading unit trust will incur sales charge. So while for ETF, the price is what you pay, and then they have a expense ratio which has already reflected in the price you buy at. And lastly, ETF charges you a trading commission, but unit trust is not. Now I talk about the S&P 500 ETF, which is a basket of 500 shares together. So this is the market ETF, which allows you to trade the US market. Then because ETFs are so attractive, people started to derive new types of ETFs. Okay, so according to Franklin Templeton, 2023 will be a year for playing defense, optimizing income, and allocating the weakening US dollars to the emerging market. So all these types of ETFs like multi-factor, dividend ETF, and single counter ETF will be likely very attractive this year. So now we are going to talk about what you can actually get or achieve when investing into ETFs. Now I will share with you how can you buy ETF with minimal cost. So basically, there are more than 3,000 ETFs for different markets available on Poems. And for Poems, there is no platform fee, no custody fee for Hong Kong and US, when you invest in Hong Kong and US ETF.
But instead of diversifying using stocks, you can consider diversifying using strategies. So back to portfolio construction, how do you allocate your assets? Number one, of course, your risk tolerance. Another thing is time horizon. And last one, investment objective. So three important things to note. Number one, expense ratio, liquidity. And last but not least, structure. So expense ratio, this is an example of the S&P 500 ETF. It's called SPY, only 0.09%. Next, liquidity. When there's high liquidity, generally the bid-ask spread is quite tight. Last one, structure.